Hi guys, how are you doing? Okay, great. So it's nice to see you all here. And tonight we're going to go through a very interesting company. A lot of probably know that company. Some people probably never heard of it. It's a specific company from telecom equipment industry. And I believe personally that it has currently good opportunity for us as investors. Okay, so let's start from the slides. Now, before I continue, I just want to ask you to read the disclaimer, and I hope you understand that this seminar is educational, and if you're going to make any decisions, so you have to take into considerations your own personal circumstances. You have to understand how to balance your portfolio. You have to understand your exit plan. So in the best case scenario, in the worst case scenario. So before you trade any assets, you have to do that, okay? So plus you put from 0 to 10 how you understand it, and then we'll continue. Okay, we're going to go through current market situation, what is happening in the market, and then we're already going to discuss more precisely this specific telecom equipment industry, and then we're already going to go and analyze Cisco systems. All right, the ticker for this specific company is CSCO. Now, let's start from Dow Jones Industrial Average. For people who are just new to the market, I will explain that Dow Jones includes 30 biggest by capitalization companies in the United States. And it's an average of these 30 companies. And it's believed that if we see that index growing, it means that majority of those companies' share prices for those specific companies, they're also growing. Okay, and that's what we can see. And I just took the period from 2016. We can see that it was a growth since 2008, like constant growth. And then we can see that in March of this year, we had this huge drop because of pandemic. And we bounced quite quickly. And as you can see, we're on uptrend, but we still didn't get to the highest point with that specific index where we were before this crash happened. Now, this is a weekly chart, and each candle represents 1 week. Okay, guys. And basically what you can, just a second, one more here. Okay, that's what you're missing, probably the video. If I show you something just for you to see. All right, and that's what we can see. So trend. The question is how far it is going to go further, right? And if we go into look daily chart, each candle represents 1 day, and that's what we can see, guys. We can see a few waves, 1, 2, 3, and like it could be third wave, it could be a fourth wave. And basically, at the moment, we're kind of consolidating at a very interesting level. Now, for those who don't know technical analysis, it could be probably not clear why it is very important level. For those guys who kind of understand technical analysis, it would be easier to understand. Just to show you that if we continue actually this line further, so we can see that once it was bounced here, I presume you see my mouse, yeah, you see, and then it was a support here, then it became a resistance. So we can see after the fall, it's bounced back from that level, and then a couple times after already the recovery week level. So this is kind of a zone where we bounce from. And in August, we broke through the zone, went up and tested it again. You can see it's whatever was before the resistance line here became support again. And then we went practically until the highest point, and then we went down, and now we can see again we are bouncing off that support. Now, if previously every time when index fell in price, it bounced pretty quickly. So one couple of days and bounce back, couple of days and bounce back. So you see like one day and change the direction. Whereas here, we kind of already bouncing on one spot for a week already. And it tells us that there is kind of not clear intention for sellers and buyers. People, traders and participants in the market, they're not sure which direction market is going to go, okay? And basically, it's quite possible that if we break through this level, and believe me, a lot of people, a lot of traders, especially who base their research and base their strategy on technical analysis, they're waiting for this period. So if we break through this level down, most likely the index will move to about 24,760 points here. So it's going to be roughly 200 drops, 250 drops, so about 8% from the current level. When the index goes down, a lot of companies, not only included in the index, they also go down. And that's why when you see something like that, you have to be really careful when you enter a position. So for example, if you transfer the cash right now and you have available money to invest, so you have to be very careful when you're choosing the companies, especially stay away from bad companies, because when the market is so high, when it start going down, most likely bad companies, they're going to fall much more. Even good companies, solid companies, which are overvalued, they're also going to go down much more. So that's why when you're choosing companies at that specific time, you have to be kind of analyzing them in much more details than it usual time. All right. Of course, it can bounce back and continue uptrend on that level, but personally, I believe that market is quite overvalued right now, and I'm going to explain you a bit later why I think like that. Now, if we look at Standard & Poor, so this index called S&P 500, and as you can see in its name that it includes 500 companies, and usually compared to previous index, they are not biggest companies, they are small, medium, and big size. So some companies, they included in both indexes, some of them just in one particular index. As we can see, this index moved a bit differently, and it went higher than a previous index. This was about what level of 33,038. That was 33.93 was the highest point before the coronavirus. After the crash, we went up, and now actually the index is much higher in price than it was at that point. So remember that Dow Jones didn't go as high as this specific index. And again, we bounced back down, and again we're consolidating. We're consolidating on different level, but as well, that was previously resistance levels. And now we just bounce in there. So if it breaks through down, so most likely we're going to go to about 3,330, or if it goes even lower, we can see it around 3,000. So which will represent more than 10% drop. Okay, so be aware. Although I am saying you based on levels, if we look at indicators here, they're actually showing us that indexes are in oversold positions and already turned. It's a good signal when we see something like that. It's mostly indicate the growth. So based on that, we can expect that the index is going to go up. And of course, the whole market and majority of companies in the market will go up as well. Now, the third index which we're going to look at, COMPQX, NASDAQ. And 100 companies, majority of them tech stocks, technology stocks. And as we can see, that was the point before the crash, around 9,700 points. It's dropped to 6,900 points. So it's actually dropped much more than two previous indexes. And look what happened. It's moved much more. And the main reason for that huge move, because companies in tech sector, they didn't suffer from pandemic as much as companies like for example, in the retail sector, or like travel industry or any other industry. Okay, they didn't suffer as much as like those companies, and that's why people start moving money from one particular group of companies to another group of companies. When you analyze stock market in general, and a lot of people say that like people moving money from the market, but in reality, what happens if somebody put money into the stock market and they bought some companies, very often when something happens and stocks start going down, they sell those particular companies, but after that they don't withdraw the money from the market. They're actually reallocating them to another business. And of course, if current situation creates certain uncertainty for some businesses, and people understand that, and if they had, for example, money in a business like some retail businesses or airline industry, they withdrawing money from there and they're putting money in companies which they believe secure. Just for a second, guys, I'm going to turn off your microphones because I can hear you. Just then you can unmute yourself if you want to. Okay, just because I can see the background noise, and probably you can see as well. Okay, that's why it's important to understand and the reason for that specific move. Okay, it's not just because all these companies they started performing better. Some of them are, some of them not, but because people moving money from one industry to another industry. Okay, and that affected tech companies quite a lot. Okay, let's have a look at another index which called volatility index, VIX, or some people call it index of fear. And basically, if you put two indexes together, if you put side by side Dow Jones or S&P 500 and volatility index, they will see that they are moving usually in opposite directions. So when let's say Dow Jones goes up, volatility index will go down. When the Dow Jones goes down, volatility index goes up. And that's you can see the spike here. It is a crash which happened in March, right? All indexes went down and the fear on the market went quite a lot of high, right, on the high level. And usually like professional traders, when they analyze all these indexes, they say the best time to purchase stocks when the volatility index is high. When the fear is so high that people selling off everything, it's better to come and buy, because majority of companies, they would be on discount at that particular moment. And vice versa, if you see that this volatility index is quite low, it means that generally other indexes are high, so prices are high. So when people are not afraid, there is no fear in the market, they drive the price quite high. So like Warren Buffett was saying like that, so be fearful when the people are greedy and be greedy when everyone is fearful. Okay, this is the case. Now, about this specific news. And now I'm going to explain why I believe that generally market is overvalued. Do you know, guys, I understand that some of you already kind of trading and investing and you went through our education, but some of you not. Can you please put, if you don't know what the P ratio means, and if you don't know, I will explain you what it is. And because it is important, like multiples, in order to understand the current valuation of the index itself. So basically what we can see here, that a year ago, Dow Jones Industrial Average, Dow Jones, P ratio was 19. It means that for $1 of profit at that time, 1 year ago, people paid $19. Currently, we can see right now on the 14th of like yesterday, last night, people paid 27 times for $1 of earnings. So it means that they paid nearly $8 more for the same dollar of profit. Now, we don't know here, if we look at this here, we don't know specifically how much we were making. Like if we look at dividend yield, we can see that a year ago it was 2.88, so and now 2.2. It means that previously, index is high now. Now, if we look at NASDAQ and Standard & Poor's, it's a very similar situation. And look, NASDAQ last year had a multiple of 24. So people paid $24 for $1 of profit of that particular index, whereas now they're paying 36. So it means that $12 more for that particular dollar profit. Okay, and similar situation with Standard & Poor's. Now, guys, that information from today's, okay, I took it from Wall Street Journal today. But if we go back last month, August, see what happened during that period of time. NASDAQ, Standard & Poor's were 35, close to 36, but below 36. It means that during that period of time, the kind of prices of those indexes increased or earnings decreased. This coefficient changed. And if we go 2 months ago, that's what we see. 2 months ago, Dow Jones was 22, PE ratio 22, okay, and now it's 27. And as you can see that NASDAQ was 33 and S&P was 29. And currently, they are both at 36. So it means during that last 2 months, those indexes, they grew in price, but also the probability of earnings also dropped down, especially in the S&P 500. That's why I believe that if you compare with the last year earnings and the prices and right now, so you will see that last year economy was in a much better shape than it is now, but people paid much less money for that particular earnings, whereas now, for whatever reason, people paying much more money for the earnings which are low. Okay, and you have to think about it because usually this type of overvalued market, it doesn't last long. And if the crash happens, so we will see the drop as fast as previously. Now, I just want to come back here and just to show you how quickly the prices can drop down. And especially if you look at the last couple of months, you will see that there are people on the market and the companies on the market which are ready to sell very quickly. You can see here the drop which happened just a few days away, like a week ago, something like that. You can see it is a huge drop. So if there is any announcement, bad announcement, you will see that the market start dropping like here, okay? What kind of events can trigger that? First of all, the US election is coming up. Of course, majority of politicians which are now fighting for this presidency role, they're trying to be very careful because they don't want to be bad guys who affect the market. So they're not going to announce something really bad in order not to screw their own election. It's one thing, but still it can affect the stock market. Secondly, earnings season. At the moment, some companies are going to, like in a few weeks from now, they're going to already report their earnings. And if their earnings, and I believe that majority of company, they have like bad performance right now, so their earnings won't be great, that might affect and trigger the fall, especially if big companies, they report worse results than expect. So you most likely will see the drop as well in prices. So be careful about that. And of course, if there is any like trading issue between China and United States or any other country, it can trigger the drop in prices of these indexes as well. So be aware of that. And there could be any reason just to trigger it, but there is a problem already there. The market is quite overvalued, so you have to understand. Now, some people asking, so should I wait and do nothing? I say, if you don't know anything about the market, so it probably would be a wise decision to do. But if you understand the market, of course, even when the market collapses, there are still companies in the market which are going to perform much better, and instead of fall, they're going to grow. And today we're going to cover one of these companies, and I explain you my opinion why I think this way. All right, guys, before I continue, can you put from 0 to 10 how you understand the market situation? And if you have any question about that, can you please let me know?